Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now there's quite a lot going on here, so just focus in, get yourself a coffee. I'm not going to try and drag it out too far, but there is a bit of connection here that you need to understand. Now, Donald Trump, that'll just get bigger and bigger as we get closer to the elections. You know, what that does for the US dollar and everything else, it's all purely speculation, but something that we can look at later on. Now, more importantly, we've got the Bank of England this week, right? It's a line ball decision whether they cut rates or not. I'm sort of leaning towards the cut situation. I think a lot of these central banks have got to get ahead of the curve, and the Bank of England will be the first tester. Now, when it comes to actually price action, right? There's been a talk about global risk aversion last week, right? With the yen coming back, strengthening across the board, and all these sorts of things. But this headline is one of those ones that just doesn't really connect. Dollar treads water after tame US inflation report. Yen rally stalls. Now, the market has run into that yen trade, right? We saw all the yen crosses, sort of screaming to the downside as the market anticipates a 0.1% interest rate hike by the Bank of Japan on Wednesday. Now, that's factored in, but you can see like getting into the trade randomly doesn't work. Right. We are back in the cloud. It is working around what's going on. Like the next move for me comes with what the Bank of Japan says after they do raise rates. And I tell you what, they've been so instrumental in trying to get the yen, to go back up, which means all the yen crosses down, that they can't afford not to raise rates now. And it has been factored in at 71%. If I just get the Bank of Japan here, you can see hike. Well, actually, it's just come off, like even in the last couple of minutes. It's a little bit volatile, this table. 66%, right? That was at 71, 72% like 5 or 10 minutes ago. Bank of England at the same time, 52% cut and 47% no change, right? That means the sterling on the announcement will whip around the place, right? So there's a few things here in the articles, but it's more about generating, viewers than actually telling us a lot about what's going on. Now, last week, this is the PCE data, right? The inflation numbers from Friday. If anything, the PCE price index numbers 0.1, expected 0.1, 2.5, expected 2.5. The fact is it's 0.1 lower than before. It's like they've cherry-picked the story, and because the core numbers were slightly stronger, right? So they're talking like things are cooling, but basically the Fed are on track to start cutting rates. Not this meeting, next meeting, all the ones after that. So that's where we are. If you look at the global markets, right, there's two things you need to do. Have two different perspectives. Like what is going on here in the major currency pairs? For example, where are we? Like if you look at the dollar index, it's sort of mid-range, and euro's back to mid-range. If anything, sterling is still above that resistance line, so still realistically going up. Aussie's back in the range, got sorted out, as is Kiwi. Dollar CAD's a little bit higher. You got dollar yen going down, and dollar Swiss on the downside there as well, right? So we are seeing buys of Swiss, buys of yen. Whether that's risk aversion or some sort of safe haven on the colliding of various central bank policy, but you can actually isolate a little bit more, right? So Aussie and Kiwi. Now, both of these currencies have relatively high interest rates. The market did get very long, and I was sort of talking about looking at getting long, particularly the Aussie, etc. Now, this risk aversion that was apparently going through the market last week really collides, and this is about global growth as well. China is really stumbling. And if you go back to the global financial crisis, 08, 09, China bailed out the world. They were buying everything, buying bonds, buying everything globally. Now they are coming unstuck, right? So that is putting huge pressure on the downside of Aussie Kiwi, massive clean out of long positions, right? And also dollar CAD. We've seen oil, up towards $87. It's fallen $10. It sort of did come back sort of during the week, but it's still falling, right? So that puts upward pressure on dollar CAD. Now, the yen, well, we know, I was saying this quite a while ago, the Japan, or the Bank of Japan, I was going to say, like, they just don't have enough cash to sort of really jump into this. They need weak US fundamentals to start talking this up. The best thing they can do is raise rates by 0.1. But you know what? That could really smash the Japanese economy. I mean, it has been on its knees for 40 years. So maybe it doesn't even have an impact, but we'll find out. So Swiss and the yen, definitely worth opportunities to get into the trades there, right? So that's your long-term perspective. So you're looking across some of these and you're like, well, there's not much going on, but you can really connect with where market direction and momentum is coming from. Switch that to the hourlies, right? And you can see like the dollar index and even sort of dollar yen, euro, that move on euro, sort of sterling at the end of the week, Aussie, it's all been diffused. Now that may be profit taking ahead of the weekend, but we have sort of recalibrated what the US dollar is doing and what the rest of the pairs are doing there as well. We have got some great trend lines to be looking at here on the hourly charts, like on most pairs, right? Dollar yen, obviously. Dollar CAD on the downside. Euro top side, sterling top side, Aussie top side. Kiwi's got a bit of work, but it's got a nice trend line there on the top side as well. So what we're looking for are opportunities that connect with these, either keeping an eye on oil or some of the Canadian data. Definitely some Chinese numbers, Aussie and Kiwi. And then obviously Wednesday, we've got the Bank of Japan. It's going to be huge for the yen and the yen crosses. And then also we've got the Bank of England. So sterling and sterling crosses are going to be in play. This is a really big week. Now, if I give you a look at the calendar here, just using trading economics, like Monday, yeah, there's some things going on, but really it's what comes up after that where things are really going to kick off. Tuesday, I mean, I know the GDP numbers here out of Europe and Germany have been highlighted, but you know what? I just don't think they are a focal point at the moment, right? It's more about interest rates, inflation. So, you know what? The German inflation numbers probably worth looking at. This is where we get our first look at some US numbers too, the S&P Case-Shiller numbers, right? These are a good historical number that you are worth looking at. And I think this week, because traders are starting to froth about what's going on, we are getting closer to central banks taking action. So all these peripheral, now JOLTS job openings, there's no way that's a high impacting number. It's a number. I know employment's a thing, but that shouldn't be highlighted. Consumer confidence, well, that's something else to look at there as well. Now, we do have a bunch of Japanese numbers coming out. I don't think they're really that instrumental in determining what the Bank of Japan does with interest rates on Wednesday, right? Down here. They have made a predetermined decision. If we raise rates, the value of the yen will go up. And so all those imports, so everyone's buying all these imported goods, which you wouldn't think would be great for the country, but they want that to go down, makes everyone happy, and they can start buying things again. But so you come into Wednesday, we do have the Aussie quarterly numbers, right? Not just the monthly indicator. So this is a big day. Wednesday's huge for Aussie and also the Kiwi, right? The Kiwi will follow the Aussie around. So we've got these inflation numbers in the Aussie. They are expecting slightly weaker numbers. Okay, so, but the key part to this is it's these manufacturing numbers that come out at the same time as the inflation numbers. That could be the key component. So you want to be making sure if we do get weaker Aussie numbers, that we do get weaker manufacturing numbers in China. If they're stronger, it's going to make that opportunity a little bit more convoluted, right? But the key aspect of, and this is like massive market anticipation, the BOJ rate decision. Okay, a 0.1% interest rate hike factored in. I think it's about 70, or as I was saying, about 70% down to 66. That is key. Now, unemployment figures in Germany, man, they are on the money every time. What's more important is Eurozone inflation. You do have the GDP numbers in Canada. I'm not like GDP just isn't a thing just yet across the board because everything's so fragile around inflation and employment. When everything sort of stabilizes, that's when GDP numbers become the benchmark measurement of what's going on, right? There's too much going on at the moment, I think, for these to be really coming into play. Now, once again, you come into Wednesday, it's a non-farm payroll week, right? It's the first week of the month. So we do start to get those jolts, job openings, employment cost numbers. We've got pending home sales, and then you've got the Fed, right? This I believe this meeting here, right? It's all going to come down to the press conference probably, but it's all a foregone conclusion. No change, right? We're on track. We're going to do this and do that, right? I can't see this would be one of those Fed meetings that isn't like you're not going to be frothing and sort of placing orders and trades all over the place because we sort of know what they're doing, and that's factored into the market, right? You come into Thursday, you're looking at well, there's a bunch of various things, but really the key to it will be this interest rate decision. Now, some of the consensus, I mean, it is a line ball decision whether they cut rates or not. In that situation, it's either going to go up or down, right? What we need to be doing at the time of that release is looking at what's happening in the market. Is the US dollar like having an effect, an equal effect across all instruments? If it does, it makes the trading opportunity easier. So there's vote count will be important. The press conference, the statement, all these various things. So, and as I said, with the interest rate decision, it is a line ball decision. So half the market will need to sell if they cut. Half the market will need to buy if they don't cut, right? So you're going to see some movement. So that means at the time of the release, and I'll cover this when we get into Thursday's trading, there's probably not going to be any liquidity, right? Because the banks will pull the liquidity because there's too much risk around the actual release of the event. So I'll be very careful with that. We'll see how it plays out. I'll cover it, as I said, when we get closer to the date. Thursday, like every week, you got the initial jobless claims numbers. I'm surprised this isn't highlighted in like a high impacting red because it has been sort of impacting the market previously. ISM manufacturing numbers, okay, definitely worth a look. Like as you can see, we've got loads of stuff coming out, right? And it's almost like there's too much to be considering. The inflation rate out of Switzerland, definitely worth having a look at there. I mean, you got some home numbers there in Australia. They've been falling. It really depends on what the inflation numbers were on Wednesday. And then you get into the non-farm payrolls and, you know what, slightly weaker numbers expected. This could be not even really like a massive trading event, but the indicator that the Fed, you know what, it is factored in like 95 or 100% that they are cutting at the next meeting. A weak number here will absolutely confirm the plan, and the market, I believe, will go back into a selling dollar situation, right? But by the time we get to Friday, the Bank of Japan's probably already raised rates. Bank of England may have cut rates. There's a potential for a huge amount of reaction across the board. And this is what I'm talking about when I come back and I was talking about the hourly charts and all these trend lines, because we have got good entries on a lot of different things. We just need the penny to drop. Now, that interest rate cut coming up for the Bank of England, it's 50% factored in, right? Or if I come back to the actual table here, Bank of England, 52%, right? So that's like a line ball decision like that. It is a trading opportunity. If we've got trend lines, we could potentially be getting into it. But as I said, we're just going to avoid the initial volatility. And that's something that is a real thing for us. Now, global markets, just having a look at what's going on here. The US equity futures up, right? That's driving Asian equities up. Are we seeing some uniformity here on the currencies? Not really, right? We're just coming out of the weekend. There's a bit of news to factor in. Donald will be out there sort of talking up things. Looking at the US treasuries, you know, the short-dated treasuries, a little bit lower, right? Sort of takes off a bit of the steam off the dollar rally. We'll see how that goes, right? The treasury is going to be important this week, as will the equities, right? And with non-farm payrolls, everything's going to light up like a Christmas tree come Friday. But as I was saying, you've got to have your wits about you. So I'll be covering or providing videos around what the key opportunities are each day, because there are lots, right? Doesn't matter really what time zone you're in. You're going to have opportunities across the board. There's no need to rush into all of them. What we want to do is see what's going on the major instruments, right? Or just even focusing on the hourlies. See where momentum is. Does it line up with longer term direction? Have we got trend lines to sort of, to avoid liquidity issues, trying to get into trades? That's always something that you got to look out for. And then we can piece together the data as it comes out, sort of look for, we're looking for opportunities where we have the edge, right? And it takes a bit of patience and control to wait for those. And you know what, just scrolling through the data, there's loads. There's loads of opportunities this week. So keep your powder dry. I wouldn't be sort of rushing into things sort of like crazily at the start of the week. We've got plenty of time to sort of kick things into gear come even Tuesday, right? So get your charts all set up, understand what you're doing, write down or note down where the various instruments are going, whether you're trading equities, currencies, commodities, whatever it might be, because the US dollar is going to be sort of, doing a lot of things. And with that, if the Bank of Japan, right, if they do raise rates as expected, well, that's sort of mostly factored in. The dollar yen, the yen crosses will go down because there's 30% of the market that hasn't sort of factored that in, right? That I would expect what it's going to come down to is if they come out and say, you know what, we're going to raise again, which I can't actually see. They haven't raised rates for 30 years. So I can't imagine the general public would be like very happy if they started raising rates more. But anyway, we're going to see what they have to say. It's going to have an impact on the dollar, right? And this whole risk aversion thing, if everything starts blowing up, then we might see the yen and Swiss really start to move to the downside as that sort of safe haven trade comes into play, which is a little bit weird, right? Usually you see that around geopolitical events. Donald Trump is a geopolitical event in himself. But you know what? The colliding, right? Probably not the best word to use, but where these global interest rates sort of coming to a head, everyone's cutting. I know this table shows the Fed as not doing much at the moment, but if you go into, or if I go into the what the Fed are up to, right? This meeting, no change, and then 100% markets factored in cuts for the next, how many is that? Like eight meetings, right? 0.25% cuts. You can see where the dollar's going. It's just a matter of where the rest of the central banks are going to be doing the same thing, because the Bank of England, ECB, et cetera, so forth, are all doing the same thing, right? Anyway, huge amount of stuff going on. As I said, we'll play it out. I'll cover the various things as we go through the week. So look out for those, and let's see what we can do here with almost too much abundance of macro fundamentals. All right, guys, have a good one. All the best. Cheerio.